Hi, welcome. Thanks for watching and I appreciate you being here. Today's video is about my 2021 tax refund as well as the process of filing the taxes itself. In this video, I'm going to discuss what happened when we filed our 2021 tax returns. I'm also going to talk about a common perception of tax refunds, as well as why I, generally speaking, agree with it, but it's not always possible. That's also going to explain why I got such a large tax refund this year. In order to do that, I'm going to provide some background on our family's tax situation. I'm going to discuss our specific tax situation in 2021, as well as our experience with filing, the outcome of filing our taxes. So essentially what our tax refund amount was, what our effective tax rate was, and the next steps, deciding how to spend that money or if I should spend it at all. And to wrap up, I'm going to provide some references that you can use to look up some of that information and do some research on your own if you are interested. But first, here's a little bit about me. Hi, welcome to my channel and I'm glad to have you here. Here's a little bit about my family. Our household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. My husband and I both went to graduate school, but we no longer have student loan debt, fortunately. I work in banking and he works in aviation. I handle all of the family's finances and I love my role as the self-appointed CFO. I love talking about all things money, making money, saving money, investing money, and optimizing my portfolio and my finances in general. I look forward to taking you on a wealth building journey with us. I hope you enjoyed the videos and the channel as a whole, and I look forward to getting to know you. I am very open, so feel free to send me messages at any time or starting conversations in the comment section below. In order for this video to make sense, you have to understand what our background is as a family and how that affects our taxes. We are a married couple with one dependent. We are both primarily W-2 employees. We also both max out tax advantage accounts. That means in 2021, we put away $19,500 each in our traditional 401ks. And in 2022, we are striving to also max them out, aiming for the new maximum contribution of $20,500. We each also do $6,000 to our Roth IRA. And because we have a child in daycare, we also max out the $5,000 dependent care flexible spending account. We are homeowners, but we also have 3 rental properties, but one of them is in a partnership with somebody else, so we get a K1 for that from the partnership, as opposed to the other 2 which we own directly and we manage ourselves. I also think that it will be helpful for you to understand and be reminded of the tax benefits of owning rental property. These benefits don't necessarily apply to everybody, and they are not by any means the only benefits that you can get, but these are the ones that either consistently apply to us and or definitely applied in 2021. Remember that operating costs, whether it is repair, maintenance, taxes, insurance, etc., are deductible. Also, the mortgage interest that you pay on the rental property is deductible as well. And finally, there is depreciation that the IRS allows you to use depreciation as a form of an expense, which further lowers your taxable income. In our case, we use the most common one, which is the straight line depreciation over the course of 27.5 years. Now, before I get started, I do want to say that I understand full well that tax refunds tend to be frowned upon, especially when they're very large, because it is seen as an interest-free loan to the government. It is an interest-free loan for money that you didn't have access to all year, money that you could have either had invested in the market, that you could have used to pay your bills, or that you could have used to pad your emergency fund. It makes a lot of sense, but we also have to admit that completely avoiding tax refunds, that is not always possible, because not everybody has a straightforward situation where they can calculate within a couple $100s what their tax liability is. And at the end of the day, if I have to choose between getting a refund or being in a position where I'm penalized for underpaying, I would much rather get a refund than to face the penalty of underpaying my taxes throughout the year. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good, and of course subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. One of the goals that I had set for myself this year was to file my taxes on time and accurately. I actually included this in the April challenge, and what I do is every month I select one or two things that I want to achieve that is related to personal finance in one way or another. I am going to be doing this all year, and in December I will be setting new goals that I hope to accomplish throughout 2023. There is an initial video that I can link in the description box below that lists all of the challenges for the year. I encourage you to watch it and join me, or at least make sure you subscribe to the channel and turn on your notification bell so you can be aware when I post new videos that update you on my progress. Typically, I do a challenge update as part of an overall update, but this was a big one, so I figured that it warranted a standalone video. Okay, so I talked about our general tax situation, but I want to talk about our 2021 tax situation because that was relatively unique. We had a major renovation on a rental in 2021, and that contributed to lowering our rental income significantly. Now, keep in mind, not every change that you make to a rental property is going to have the exact same effect. Some of it is considered an expense that you recognize in full in the year that it happens. And there's another kind of work that you can do on a rental property that is considered to be a capital expenditure that increases the value, or that is considered to be an upgrade. And that is something you recognize over a longer period of time. I am not a tax professional, and this is not tax advice, so everybody needs to figure out what works for them in their particular situation. And I am going to avoid going into too much detail here about exactly what I did, but let's just say that the renovations that I did lowered our rental income. Additionally, we refinanced the mortgage on our primary residence because there was a much more favorable rate, and you do incur some expenses when you refinance a mortgage. Some of those expenses, you can add them to your taxes and clean them. Also, we have a child that is under 6 years old. That means we were eligible for the child tax credit. The child tax credit is a refundable credit that is capped at $3,600. And finally, in December of 2021, the last couple of days of the year, we took possession of a vehicle that we had ordered in October that took 3 months to come in. But that vehicle happens to be a plug-in hybrid electric vehicle. It's one of the ones that qualify for the tax credit. That is a non-refundable tax credit that is capped at $7,500. If you are interested in why we bought a car, what kind of car we bought, and what the buying process looked like, make sure you check out the video. I am going to link it in the description box below. Now that you are armed with all of that information, here is my experience filing the 2021 tax return. I filed using TurboTax on April 1st. I requested direct deposit. Within 24 hours, the IRS had accepted the return, and sometimes towards the end of April, the refund status was updated as approved, and there was a notification that said that we were going to get it within a couple of weeks. However, instead of seeing money in my account, I eventually received a letter from the IRS with the code CP53. That is the letter that tells you that they are actually not able to do a direct deposit. They're not able to honor that request, and rather they will be sending you a physical refund check from the Treasury. Shortly after receiving that letter, I did in fact receive a check from the Treasury in the amount of $20,500. Our effective tax rate was actually negative for 2021. We did not pay any federal taxes in 2021, and on top of that, we got money back from the government. Here is how we did it. First, we took advantage of the rental property tax benefits. That lowered our income, which in turn lowered our tax liability. We did still have some tax liability that remained, but that liability was wiped out by the plug-in hybrid electric vehicle tax credit. After they applied that tax credit, we owed $0. And do you know how in your paycheck, every paycheck, your employer takes just a little bit of taxes out based on information that you put in your W-4? Well, your W-4 is a way for you to try and guess what your tax liability is going to be. That information is calculated based on a number of factors like your number of dependents, whether you're married or single, what you think your deductions are going to be, but they also try and determine it based on your income. Well, based on my income, I was supposed to pay a certain amount in taxes, and those funds were coming out of my paycheck every 2 weeks. Same with my husband. Remember, he is a W-2 employee just like me. Because we were able to take advantage of the benefits from having rental property, all of the things that we were able to write off actually lowered our income. By lowering our income, it lowered our tax liability far below what our employers had been calculating throughout the year. Because remember, when your employer is estimating what they think your tax liability is, they don't account for things like rental property. So it is very possible to end up with a refund because your employer is not accounting for the paper losses that you are recording as a result of owning rental property. So not only was my tax liability wiped out, anything that we had paid throughout the year was returned to us. Because the child tax credit was a refundable credit, even if you don't have a tax liability, you do still get money back. We ended up getting back more than we paid. So what are our next steps? The check has been deposited, it has cleared, and I am currently deciding how to use the funds. I have laid out a couple of different options, and if you feel inclined to do so, feel free to leave a note in the comment section with whatever option you think you would do if you were in my shoes. So option one, I could pay $7,500 towards the car loan. That amount of $7,500 is not random. I selected it specifically because that is the exact amount of the tax credit. But keep in mind that loan is 1.9%. When was the last time you got to use somebody else's money for 1.9%? With inflation being what it is, I am making out like a bandit, and that amount is so low that it almost feels wrong to pay it, but it is still an option. I could invest some or part of it in the market, or I could save that money and use it to max out I-bonds in 2023, depending on what the October rate is going to be. I-bonds have a calendar year cap of $10,000 per social security number. If you want to know more about I-bonds, how they work, and how you can use them, I'm going to post two links to two different videos that I made on the topic. Take some time to check those out. I could also save part of it to front load our health savings account. Currently, we are using an FSA, not an HSA. However, I have decided that in 2023, after my husband's enrollment period starts, I am going to sign us up for a high deductible health plan, which will make us eligible for an HSA, and we're going to get an HSA. The new maximum contribution amounts for 2023 have recently been announced, and they are $7,700. If I did pick that option, I would still have some money left over to allocate to one or more of these other options that I already mentioned. And then option number 5 is not necessarily the most desirable one, but it is still an option. I could spend it. I could spend some of it, I could spend half of it, I could spend all of it. Not necessarily the wisest choice, but it is still a choice. So these are the options that I have. If there is anything that I am not considering, please feel free to weigh in. Or if you have one of these options that you think is more favorable than the other, I would also like to hear from you. Certainly do not hold back. Feel free to weigh in the comment section below. Here are some sources and additional information that you can look up. I will link all of these in the description box below. There is the CP53 letter that I received where they declined to issue a direct deposit because they actually decided to scrutinize my return and determine that it needed additional review. Part of me believes that that is because the refund was large and they wanted to make sure it wasn't fraudulent. They did say that they found nothing wrong with it and that they issued the check. The next link is information on the plug-in hybrid electric vehicle tax credit, and then there is information on the child tax credit as well. And finally, the last link is I-bonds, where you can get them, where you can buy them. And like I said, I'm also going to link my own videos on the topic. If you have any questions, feel free to post them below and let me know. But before you go, I always want to hear from you. What was your experience with filing taxes this year? Did you file on time? Did you file on your own, or did you pay someone? I also want to know what your thoughts are on tax refunds. Are they good? Are they bad? And did you get any money back, or did you owe money? If you are comfortable, feel free to share it below and share your experience. I look forward to hearing from you, and I will see you in the next video.
I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.